Sullivan. I'm a former IRS agent and teaching instructor. I worked at IRS over a decade. I've been in private practice for 4 decades. I'm a national expert when it comes to IRS resolution matters. I've worked about 10,000 cases in my lifetime. I've been on both Fox and ABC News, so whatever I tell you pretty much is going to be the gospel according, at least to me. It's very important that you understand that I'm trying to give you the inside information to be educational and informative. We are available for consultation and representation. Today I'm going to talk to you about a 4180 interview. Most people who are looking at this 4180 or even clicking on this video are familiar with a trust fund penalty, and that's why that you're hitting this. As a former IRS agent, revenue officer, I don't know, I probably set up 1,000 trust fund recovery penalties just over and over and over and over. I've gone ahead and had to make determinations on individuals who are responsible for the trust fund penalty and make these determinations so IRS could collect the withholding and Social Security back from these employees. One of the key tools that the revenue officer uses is the 4180. It's been modified many years. It's the report of interview of the trust fund recovery penalty. So basically when a defunct or is going defunct or owes payroll taxes, IRS goes in, a revenue officer makes a determination who is responsible for the trust fund. The trust fund, probably as many of you know, is the withholding in 1/2 of the Social Security on a 941 form. What they do is they pass the trust fund amount, the withholding and half the Social Security on to people that they deem as responsible. You can go there, as if you lose this initial case, you can go to appeals and go to tax court. There's actually 2 appeals you can go to if you need to. But anyway, at the end of the day, the revenue officer is going to look to see who signed checks, corporate resolutions, who ran the company, who had the right to hire or fire. There's a whole list of things the revenue officer does to find out who's responsible. It's easy to do as an RO because you just look at the documents, who signed the checks, who made decisions, who hired and fired. If you go to a company and interview 4 or 5 people, you're going to find out. It's not rocket science. There are exceptions, but the 4180 form, this interview, kind of is an important piece because the revenue officer goes in and takes this interview. Matter of fact, the RO is supposed to take the interview themselves. Many times, like if I have the case, I just send it in to the revenue officer. They're happy to get it. But that interview form asks a number of questions, maybe up to 100 questions, to assert or determine or use discernment as to who's responsible. So if you are going into IRS and they are asking you for this 4180 interview, you better talk to a professional because there are some tricks and traps on this form, and you're just not going to want to go and sit down on the interview by yourself. Let the revenue officer fill it out, because by that very form they can hold you responsible for the tax, because you're in fact giving them the information and you're signing that document that's correct. So you're giving IRS the information to actually make you responsible if you don't answer those questions correctly. So the 4180 is a very important documentation that goes in the trust fund recovery file for the revenue officer. And I'm going to tell you now, if it's got to this point where they want you to fill this 4180, I would call a professional. It's probably time maybe to let us do the representation, give you a consultation, or let your own CPA or whoever you want to use do this, because it's at that point they're ready to make a decision. And it is, if you're asserted this penalty, it's like you owe personal income tax. IRS is going to set up an assessment in your name, and they're going to go ahead and try to collect the money from you. They're going to ask for a financial statement, and they're going to look to you. There's a 10-year statute of limitations open to collect the money. It's a serious matter. Don't let this go. Like I said, it's like owing personal tax. The IRS is going to create assessment in your name and who else is responsible, and they're going to follow you down the road till they can collect the money. By the way, if this information was helpful to you, I would love a subscription. YouTube needs those, so let you know I'm giving you correct information. So if you want to leave me a comment, and that'd be great. My YouTubes come from your comments. So anyway, if you give me a subscription, that would be great. I'm available, like I said, for consultation or representation. Take the 4180 serious.